away. But right now, I think we're entering a period where the market will be down, right? You'll look and say, oh, the market was down today. But the irony will be that there'll be more stocks higher inside the market than lower. Now, that's a problem for investors who have been told, listen, just simply stay away because there have been 10 names that have been on fire, and when they come down, you don't want to be around. I want to bring in now to help us hash it all out, Main Street Asset Management Chief Investment Officer Aaron Gibbs. So this is earlier today. Essentially, nothing has changed. So you got 11 sectors in this S&P 500. You've got 1, 2, 3, 4, 5, 6, 7 of them are higher right now. So there are more sectors up than down. And of course, you know, you got the biggies, the techs, all the growth sectors are down. If you read the paper tomorrow and we finish like this, you'll say, oh, the market was down today. But there's some opportunity in there.
Right, and I actually think, you know, my new saying, it's no longer the TINA environment. There is no alternative. It's the TAMA environment. There's
TAMAs.
TAMA. There are many alternatives.
I guess
many alternatives.
Okay, because I'm like, I don't know. I guess you got to go to Miami Beach to meet the TAMAs.
The TAMAs.
The new TAMAs. Huh? Hey, what's your name? They call me TAMA. So there are many alternatives.
There are many alternatives, and so we no longer have to focus on just those top 10 stocks. We can dive deep into industrials, real estate, consumer discretionary. There are lots of opportunities within the S&P 500, and we see that, and it's really just started since July.
Right.
So, you know, people like the last segment, they've talked about, you know, there's still the winners year to date. Yeah, because they outperformed in the first 6 months.
Right.
But right now, it really looks like we're at a turning point. Let's take some opportunity for those lower price stocks.
And not to sound cliche-ish, but it really sounds like more now than ever, it's a stock picker's market.
Absolutely, and you really want to look at your outperformers versus your underperformers. Look, we can see the index is basically flat, but we've got some big moves within that. So let's try to pick those big winners, those big.
What about the consistency? Because I've seen this a lot in the last month, and then the next day it goes back, right?
Yeah.
So I mean, is there any sector that's beginning to get some traction? Any non-growth, non-mega cap sector that's starting to really get that traction you're looking for?
I would say industrials is one of your winners. It not only has the fundamentals behind it, the cheaper valuations, but it really is when you drill down into the actual industries. It's great with transportation, it's great with consumer services, business to business services, lots of different industries. So just really good across the board.
I love the action in the transportations, and for people who really old school Dow theorists, transpos have to lead for the market to do better. You've talked about last time you were on the show, small cap and mid cap. This is the Russell.
Yep.
Golly, look at this. So it's had a double bottom. It's been turning higher, a little bit down today, but look at this. It looks like it's only got maybe one more resistance point, and it could be off to the races.
Another alternative. So, so again, this has been underperforming versus a lot of your mega caps. But when you're looking at your small caps, particularly since July, because you see that turn, it's really just the beginning of July that we've just had that really outperformance. Again, it tends to be a safer space with your smaller caps. They've got lower valuations than your mega caps, and the future is looking a lot brighter. So if we can avoid this recession, and it is, look, it's still an if, but it is looking more and more positive.
Better, though.
But it's looking better, and that's what's really pulling these ahead. And I think there's just a lot of possibility.
Now, this is also a lot of people like the smaller names because they're more reflective of the domestic economy.
Right.
Does the lower dollar help in that regard?
These, in general, the smaller caps just have less global exposure.
I got you.
You just don't have to worry about currency changes, but they are much more sensitive to higher interest rates. So if we do see the Fed get really hawkish, expect a downturn, but that could again be used as a buying opportunity for the longer term where we're seeing lower interest rates.
So with less than a minute to go, what's the wild card right now? Because you sound a lot more constructive each time you come on.
Yep.
What's the one thing? I know you mentioned the recession. Is there something else? I mean, the Fed, they meet next week. The Fed obviously is the biggest, right? They're ultimately the sword of Damocles that holds everything back.
And certainly just what we've talked about, this is really being held up by consumer confidence, consumer spending, and buying those new single-family homes, even despite high mortgage rates. It's really about the U.S. consumer. So if we see sort of a crack.
You don't care if the consumer's doing it with their own money in the bank or if they're borrowing it. You don't care how they do it as long as they keep doing it.
Right. So as long as unemployment stays healthy, as long as we still have wage gains, I think we can ride this through. I think that could be the potential crack where we would really have to see that credit come through.
Great stuff, Aaron.